Hello guys, welcome back to my channel Accountancy. Here I am with another topic of your principles, that is full disclosure. What is the full disclosure? That everything required to be recorded in the books of account must have been recorded. But everything required that is to be judged, that is from the viewpoint that is yours, users of accounting information. The information which is vital, which is important, which is material from the viewpoint of the users of accounting information must have been disclosed in your books of accounts. Now, who are the users of accounting information? You know very well that they could be your creditors, they could be the bank, that could be your income tax department while framing your income tax return, or it could be you yourself, your employees of the business, or the customers, or the government. So the people who have interest in your accounting information should be given the vital information required from their viewpoint of view. So here all accounting figures which have been recorded must carry some evidence for the transaction. Like if I say you got your Activa filled with the petrol, in that very case you can get a receipt for the petrol filled in your Activa. If you are paying your school fees, you can get receipt for the same. If you are paying it online, you get a message on your mobile. That is the evidence of the transaction. So here we talk about that there needs to be any documentary evidence that these figures actually exist. These figures have show that business transactions have occurred. It should not be imaginary. Second point relevant over here is that all the relevant information which is needed to be shown over here have also been recognized by company's law that says that everything which is vital should also be recorded in your business of account. If you can't show it in the normal accounting way, you should show it by the footnotes. What are the footnotes? When the final accounts are prepared, when the calculation of profit or loss is to be done in the business, then one statement is prepared. That statement is known as the balance sheet. This balance sheet statement should carry a footnote after it regarding something which you can't show in your business books of accounts, right? Something that is in relation to the contingent word over here I have written, like if there is XYZ company on which a customer has put a suit, filed a suit is a case, filed a case for any of the damages occurred, right? If it is of rupees 1 lakh, for any of the damages occurred because of the usage of the product of the company, in that very case, this case is still pending to be given judgment, right? What I am saying, the case judgment is still pending. Now, this pending judgment could go in the favor of the customer also, or in the favor of the businessman also. Now, in this case, if it goes in the favor of the businessman, it would be a plus point. If it goes into the favor of the customer, it would be a negative for the business. But right now, there is only case, no decision given by the court. So, how to record it? It is to be recorded as a footnote to your balance sheet with the word contingent liability. Contingent meant which may happen or may not happen. So, this case could be a liability on the firm if it goes in the favor of the customer, or it might not be a liability on the firm if it goes in the favor of the businessman. But this needs to be recorded there. Similarly, if some of the mishaps like COVID was there, if some of the companies are not able to earn the sufficient required profits, or the production is not up to the mark, they can show the reason for the same as a footnote to the financial statement, to the balance sheet. That is what full disclosure principle is to say. It is a recognized principle by the company law that everything vital to the business should be recorded in the books of accounts. Thank you, Accountancy. Like, share and subscribe. Keep scoring.